Got a video here on infinite banking or whole life insurance as a 401k alternative. And why is it a 401k alternative, and how does it differ from a 401k? So a lot of times I run into people who are looking for some kind of alternative to a 401k for whatever reason. Sometimes their 401ks are invested in very, very low yield, slow performing places, so they want to get out of it because they want some kind of growth. Other times, I have people coming to me because they want a place where they can put their money where it's going to be safer. Also, they want a place where they can access their money. Access. Okay? I would say these are probably the main reasons that whole life insurance becomes a place to put our money other than a 401k. So, first of all is the growth. Now, whole life insurance itself, historically the growth in certain policies has been about 6.52%. Now, understand that this is growth that if we treat properly will never be taxed. So you think of that, what's the equivalent? Maybe around 9, depending on what kind of taxation you're getting. But you can see that with taxation, 6.52 after tax can be a pretty significant amount of money. Now, safety. The nice part about whole life insurance is it has guaranteed minimums. And also, it has a 100-year history of growth. Meaning the companies that we use have been paying out dividends or growth to their company holders or those who have policies for over 100 years. And with the guaranteed minimums, it makes it a very safe place and can be a good place for 401k alternative. Now, accessibility is probably one of the bigger ones here. Accessibility is huge. I tell this story all the time. I had a friend who he had a couple daughters, and he had put his money into a 401k, and he had about $100,000 in his 401k. And as time went on, the daughters got older and older, and eventually the first one decided she was going to get married. Well, he realized pretty quickly that he didn't have access to any of his money, so he had to go put it on credit. About $25,000 he ended up putting on credit to pay for this wedding. Well, okay, he said, I'll get it paid back. All of a sudden, his next daughter decides to get married. After all this is said and done, he had $50,000 in debt when he still had $100,000 in his 401k. Now, 18% on a credit card, that's going to be hard to beat in a 401k to get 18+%. So that's why I say accessibility is probably one of the huger pieces of all this. In a whole life insurance policy, we have complete accessibility. We can always take loans or liquidate money out of the policy if we want to. So that gives us opportunity to use that money. Like I've shown in other videos, buying cars, you can check those out. You'll see that a lot of things we can do with a whole life insurance policy will really give us a good future, really help us move forward. So accessibility is a big one. Now, the other piece I just want to hit on is the taxation. A lot of people, when they first talk to me, they'll say, hey, can I tax defer this? I'd like to put it in first before taxes. Then after we talk a little bit, and you can watch the video on is deferring taxes a good idea, but you find out pretty quick that if taxes go up, or you're making more money, or something happens, you're more likely to pay higher taxes on the money you put into your 401k than you would have if you'd have just taken it out. We realized pretty quickly that putting our money in somewhere after taxes and never having to pay taxes again is going to be a lot better and a lot smarter decision, and puts us at a lot less risk of taxes going up on us if we get rid of those taxes first. This is another reason why I think whole life insurance offers a good